This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at key events for investors and traders. This week brings major news for artificial intelligence, but some investors may already be moving on to the next big trend. The S&P 500 rose 1.4% between Friday, August 16th and Friday, August 23rd. Interest rate sensitive groups like homebuilders, banks, and real estate advanced the most, but technology, which includes semiconductors like NVIDIA, lagged the broader market. That was noteworthy because NVIDIA, a major AI name and the market's second biggest company, reports earnings on Wednesday afternoon. It's also the top performing stock in S&P 500 this year. What changed? The answer came from Jackson Hole, Wyoming, on Friday morning at the Federal Reserve's annual symposium. That's where Chair Jerome Powell said that the time has come for policy to adjust and interest rates to start going down. He expressed confidence that inflation is on a sustainable path lower, adding that the labor market has cooled considerably. It was the Fed's strongest statement yet that interest rates will be reduced at the next meeting on September 18th. While the news isn't necessarily bad for large technology stocks, it's more positive for companies that benefit from lower interest rates. Many of those have lagged the broader market for years, as investors focused on mega-cap growth names like NVIDIA and Microsoft. Some investors may now see attractive longer-term conditions for these so-called value companies, especially because they generally trade at lower multiples than big Nasdaq firms. The Philadelphia Housing Sector Index advanced 7.3% last week to close at its highest level ever. Real estate investment trusts rose 3.6% and are now the best performing sector in the second half. Regional banks also rallied. That's especially noteworthy because they collapsed early last year, right before the AI boom started. Consumer discretionaries were the number 2 sector. Home builders led while Amazon.com and Tesla, which account for 37% of the index, barely moved. Home builders, incidentally, are consumer stocks. The real estate sector focuses on commercial property owners and lenders. Other economically sensitive consumer stocks like Norwegian Cruise Line, Darden Restaurants, and CarMax gained as well. Materials and industrial companies, which stand to benefit from potential interest rate cuts, also outperformed. The Russell 2000, which focuses on small caps, was the leading index. That's potentially consistent with a shift away from large cap growth names. The Nasdaq 100, on the other hand, lagged and failed to make a new record weekly closing high. The Dow Jones Industrial Average and S&P 400 Midcap Index, on the other hand, closed at new weekly highs. Energy was the only sector to fall last week. Technology, home to big names like NVIDIA, Apple, and Microsoft, was the second worst performer. Keysight Technologies had its biggest weekly gain in 8 years, on strong earnings, revenue, and guidance. Target also surged on signs of a potential turnaround. And now let's chart the market. The S&P 500 continued its bounce last week, with more potential indications of general strength. First, the advanced decline line hit a new all-time high, and 84% of index members rose. Those points are consistent with widening breadth. Second, TradeStation data shows the most index members above their 20-day moving averages since November. That moment was followed by limited pullbacks and a steady move upward. Third, the S&P 500 made a new weekly closing high. Similar moments in November, January, and May were followed by additional upside. However, it still remained below July 16th's all-time record price. The index also started the week by crossing above the high from August 1st, which was an important bearish reversal day. Prices bounced at that level 3 sessions later, which could mean old resistance has become new support. Another potentially important chart is the US dollar index, which often falls during periods of risk appetite. It ended last week at a 2-year low. We'll now turn to the week ahead, which has NVIDIA's quarterly report on Wednesday afternoon. Analysts expect earnings and revenue to more than double from a year prior. Wedbush analyst Dan Ives told CNBC on Friday that Wall Street is still underestimating an acceleration in AI demand. He called it the most important week for the market, potentially in years, because NVIDIA's business reflects growth in other major tech stocks. Traders could also closely watch CrowdStrike's results on Wednesday, after the cybersecurity firm caused a major computer outage last month. Computer maker HP reports the same afternoon. Dell Technologies, Best Buy, Ulta Beauty, and Lululemon Athletica follow on Thursday. There are some other economic reports. However, they may have less impact now that Powell has given clearer signs of the Fed's intentions. Crude oil inventories are on Wednesday morning. Revised gross domestic product numbers for the second quarter are on Thursday morning, along with initial jobless claims. The personal consumption expenditures inflation report is on Friday morning. The three-day Labor Day weekend follows, with markets reopening on Tuesday, September 3rd. Thanks for watching. Please visit tradestation.com for more.